Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Jeff Kilburg, founder and CEO of KKM Financial, as well as Kevin Pearly, founding partner at SkyPath Private Wealth. They join us to discuss headwinds that could potentially impact the bull market and how to address those market concerns with different generations of clients. Jeff, it's great to see you as always. Kevin, welcome to the show. Jeff, let's kick it off here. Really, that's what we're asking ourselves. Are we heading into a new bear market, or is this just some hiccups along the way and the headwinds will eventually pass?
Jill, I don't think we're heading into a bear market. We are still in a bull market, but I think this is actually a really healthy repricing. And when we talk about the Mag 7 at nauseum, you have seen that leadership get a little exhausted up here. So the semiconductors are pulling back. You're seeing NVIDIA crack under 800 for the first time in quite some time. But at the end of the day, the VIX is still under 20. It's just at 20. So I think from a micro perspective, there's a lot to contend with right now. We have geopolitical tension out of the Iran-Israel conflict. We also seen the 10-year note above 4.6% for the first time in quite some time. So as we go into earnings season, in the teeth of earnings season right now, I believe the market is trying to reprice. But again, I want to reiterate the fact that I think this is a very healthy repricing because we needed a bit of a pullback here, and it's only been 5% off the all-time highs, which we just put in Q1.
Right. Well, Jeff, you have to think about it from this perspective as well. In the first quarter, the other 493 names in the S&P returned an average of 8%. I'll take that on an annualized basis. So if you're thinking about the market broadening out and not being so dependent, and yes, I understand the weighting that some of these companies have on the Nasdaq 100, the S&P, and so forth, there are other areas of the market that are performing and operating in what's been, a challenging, more capital-intensive environment with rates where they are.
You're absolutely right. And I think you put that on the rim for me because I'm the portfolio manager of the Essential 40 stock fund. And that Essential 40, which is equal weighted today in a market action like today, when you're seeing the Nasdaq down almost 2%, you're seeing the S&P 500 down nearly 0.75%. The equal weighted Essential 40 is up 0.5%. So you're seeing that broadening out, that participation, which I think is really important for the rest of the year. And I know we're talking about today. I know I can get really into the minutia, but I think from a longer term perspective, I'm actually going to bring in Kevin. From a longer term perspective, this bull market, this sentiment that I know Kevin and I partner together, and I work with the team out at SkyPath Private Wealth, a great group in Short Hills, New Jersey. But when I partner with them, I always want to understand what sentiment is. So Kevin, if you can kind of weigh in on the sentiment of your high net worth client base, because yes, I understand this is a kind of a knee-jerk reaction to everything going on. Bigger picture, how are people feeling?
Yeah, I appreciate it, Jeff. And Jill, thanks for having us on here today. Really what it comes down to is just having that firm financial plan and really sticking to those long-term goals, because there's always going to be the ups and downs in the market as we're talking and as we're seeing today, but it's really sticking to those goals. And what happens is what some of the concerns people are having today is when they do see those sudden drops, because we haven't had a long sustained period of a market decline. And when we have those sudden drops, sometimes the phone rings rather, and they say, is this the time? Is this the top? Should we get out? So we always go back to that base case financial plan, stick with a long-term focus, and we will get through the piece. And having a well-balanced, diversified portfolio, working with professionals like Jeff to help clients meet their goals. And it helps mitigate, if you will, the noise on a day-to-day basis.
Right. And Kevin, it's interesting that you brought that up, that there are generations, especially younger generation of investors who really have not experienced prolonged market volatility. Of course, we had a couple of months there when COVID happened, but because, we were at near zero interest rates, the system was so flush with liquidity. Do you find that different generations of clients have different market concerns? And then how do you best address specific client needs as it relates to that?
We do, Jill, and it's an interesting point. We are a multi-generational team here at SkyPath Private Wealth. And as you have different generations of clients, whether it's a baby boomer, a millennial, or a Gen X, how they view markets and how they view long-term perspectives are very different. We don't have a lot of clients that are asking us that are baby boomers about Bitcoin, but the younger generations we do. And to your point, there has been that lost decade from let's call it 2000 to 2010, 11. That was that lost decade where the S&P, generally speaking, made no money. So clients that were in there kind of didn't forget that. The clients today over the last decade, outside of, as we, 08, 09, had a little hiccup during COVID, have generally speaking, have seen just a rise up in the market. And I think what it does is, volatility is always going to be there. It's nothing new, but it's that portfolios do sometimes go up and down. It's not just one straight up. And I think that's what happens. And we've also seen with new clients that have come to SkyPath, we try to pair the client generation with the generation of the advisor. And a lot of that is from different experience that one has had throughout their lifetime. But when working with an advisor, it is all about trust, the empathy, and making sure that we're helping them towards their long-term goals and understanding the perspective and the lens that they see things in the financial markets today.
Well, Jill, if I could just add on quickly, because Kevin said a word that really resonated with me, and I think it's resonating with everyone in today's market action, volatility. And I think it's really important, and I think the SkyPath Private Wealth clients understand that volatility can work to your favor, because volatility takes markets up, it also takes markets down. And right now we are seeing this down, but from last November, Jill, we've seen the market moving higher. So after 25% run, I think it's okay. And when you see a market action like we're seeing today, there's a little bit of nervousness when you see some of the profit taking, but this volatility, this is actually quite healthy. And I kind of go back to that theme of healthy repricing, because we've talked here on Trade Talks about 49.50 being that target in the S&P 500. Here we are. So I get excited about having the opportunity to rebalance, to buy some of those losers and trim some of those winners at this moment in time.
See, Jeff, and that's a great point that you bring up. It's not as simple as what you might see on social media, Twitter or whatever, that like I got in here, I got out here, best trade. It's tracked like one stock or one index. There are the mechanics of managing a portfolio. It's not as simple as I bought here, sold here, and it was the best trade of my life. It doesn't work like that when you're managing a professional portfolio.
That's right. And I think certain tilts, when I partnered with SkyPath, they wanted to have conviction. They wanted to have differentiating. I think it's really worked out well in the last couple of years of having just a little bit of conviction, a little bit of a tilt in the portfolio. And the theme that we've had of equal weighting has really been a phenomenal theme. Look at 2022, when you saw the S&P 500, which again was led by that market cap domination of the Mag 7, you saw the market move down higher. But if you have an equal weight, that ability or that smoother risk profile, there's a white paper out there. I know it's a little boring when I say white paper, Jill, but how to make more money by losing less. That's a theme that's really prevalent when you're talking about those long-term financial plan goals that Kevin and the team at SkyPath Private Wealth talk about.
Right, Kevin, I'm sure you have this conversation all the time. It is a fool's game to try and time the bottom and top of the market. Professionals can't even get it right. They might be lucky, but it doesn't mean they're consistent. I mean, you know how human psychology is. You get out at the bottom when you're nervous and you buy at the top because you have FOMO. But at the end of the day, you can kind of remove all that stress if you just stay consistent and don't think about the best trade, the FOMO, timing the market.
Yeah, it is. And that's why we really actually kind of focus a lot on the behavioral finance piece, as I mentioned, and sticking to that financial plan. I mean, I think, March of 2020, when COVID was upon us and a very difficult time for everybody, but, S&P was down, let's call it 30 some odd percent. We did unfortunately have clients we just could not talk out and they wanted to sell. But the S&P that year did close up almost 16%, I believe, on the year. So it's that old notion, it's not timing the market, it's timing the market. So we try to spend a lot of time staying balanced, diversified, and away from the day-to-day noise and sticking to the plan from the behavioral aspect. And I think that's one of the biggest things that us as advisors here, as well as all advisors do, is the behavioral coaching for clients. And keep them out of the day-to-day noise.
Right. Jeff, quick last minute thoughts here. We're going into earnings season. About 15% of the S&P has reported. They've been good. We're still seeing companies be able to manage, what's been a challenging environment. What are your thoughts as we get into, the meat of it over the next 2 to 3 weeks?
Yeah, we're going to be threading the needle. And it's interesting. You saw, some of the early reports, despite the fact that they beat on the top and bottom, you still saw profit taking. So I have a little bit of apprehension as you're seeing expectations move higher, but you're also seeing, to offset that, Jill, you're seeing, growth expectations, but not only is it growth expectation, but it's actual growth accelerating. So I think it's going to be interesting. Of course, there's a couple key names in the videos. We're watching Tesla next week, but all those Mag 7s, they will provide leadership. But I think you have to remember there's names like, Chubb, JP Morgan, Pfizer, Lockheed Martin, Duke Energy, some of those boring blue chip names. I want to see how they're doing. I want to understand what they have for forward guidance, because the whole landscape we have seen from the Federal Reserve and their rate cut campaign that they wanted to kick off, that's been delayed and pushed off. And now even Fed Bostic even talked yesterday about potential rate hike this year to really tame this stubborn inflation or this uptick in inflation recently.
All right, gentlemen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.